Makes it interesting.
Let's get back out to Omaha, where Becky Quick is with Warren Buffett, and there's a lot of important things happening, but don't forget that March Madness is right around the corner, Becky.
You should see what he's doing right now, Joe. He was rubbing his hands as you said that. Now you're talking his language.
Now, well, Creighton, it was 70-35 at one point, and I had Creighton yesterday. I don't know if you were paying attention to that. Were you watching that at all, Warren? Nebraska plays tonight.
We pay attention. We pay attention to Creighton out here.
They're good.
We talked about it earlier this morning off camera.
They're peaking. I think they're peaking. I mean, they're getting better and better and better. The three-point shooting was, I think that one guy was 7 for 7 at one point yesterday, which is, I'd be like 7 for 10,000 for three-pointers, I think. Anyway, get back to business. I'm looking forward to it, Warren, and I know we always have our own personal bet. If I get them all right, you give me Berkshire Hathaway, which would be cool for me.
I'll tell you, if you get it all the way, I'll give you my Berkshire Hathaway shares all the way to the 64.
Wow! Wow!
Fill out a bracket if it's perfect.
Pledge.
That's the ultimate giving pledge.
Yeah.
That's how sure he is that you won't be able to do it.
I'm pretty sure.
Andrew, I hear you. I hear you have a question too, Andrew.
I actually have a couple, and I thought that I read the letter like everybody else over the weekend. It was fascinated by so many of your comments, Warren. Specifically, I wanted to ask you, you talk about diversity on boards in this letter. And one of the things I wanted you to weigh in on, if you could, is I don't know if you saw, but David Solomon, the CEO of Goldman Sachs, on our air actually, announced a couple of weeks ago that he won't be taking any companies public, Goldman won't, unless they have at least one diverse board member, and are likely going to push that to 2. You know, in the state of California, they put a law into place saying that you needed to have a female board member. And I'm curious what you think of not just the push towards more diversity on boards, but the requirement. Because I also note in your letter that you have very specific thoughts about what it means to be a board member, what it means to be an independent board member, how wealth is involved in all of that. What are your thoughts? Well,
at Berkshire for decades, we've given the 3 factors in addition to integrity, but for board membership, and we want people who are business savvy. We want them to have a strong personal interest in Berkshire itself, and we've got directors who really represent shareholders basically at Berkshire, and I think they do a great job. Now, that doesn't mean that they don't think that we should delight our customers, that we should treat associates well, that we should behave well in our community, both local and national. But our directors represent the shareholders.
So Warren, just to follow up on it though, what's your thought about both the requirement that maybe banks and others, investors, are going to force companies to have diverse candidates on their board, laws, as I mentioned, in California?
Yeah, actually, there's been sent to us a proposal which, unless it's withdrawn, will be on our proxy. I can't tell you precisely what it says, but that relates to this issue, and we will get our shareholders' view on it. I personally, and I want shareholders I want directors that represent the shareholders, and you know, in terms of my estate, you know, with maybe currently $80 billion worth of shares to give to philanthropy, I hope that we have we do have a group of directors that I think will be very conscious of doing the right thing.
The reason I asked the question is because the other point you made, which I think is a very smart one and is often misconstrued in the corporate governance land, is that an independent director these days isn't always independent in large part, and you make the point that those that don't come to the table with some form of wealth often need the job. They need the money, they want the money, and therefore that makes them less independent. And the reason I ask this is one of the things, as we've been trying to get more diverse candidates on boards, more women on boards, as you know, there are fewer CEOs, fewer people who have made enormous amounts of money, and people therefore then can question their independence. It becomes a very tricky issue And that's what I was hoping you might weigh in on.
Yeah, Andrew, I've been on 21 publicly owned boards of publicly owned companies, and I've seen them in operation. And I would say that people that I have often seen, and it's perfectly understandable, I have often seen people who are classified as independent directors, and they're getting $300,000 a year for a job that takes them a couple of days, maybe 6 times a year, maybe 4 times a year, and the company flies them to their office, and it's very enjoyable, and the company's good, and who wouldn't want a job like that? I mean, it's an incredible job, and I get calls from headhunters, I get calls from CEOs, and they ask, who I think would make a, quote, good, end quote, director. And what they are asking is, who is not going to cause too much trouble and who their name is going to reflect credit on the institution. And they are not looking for somebody that I would regard as really independent. And I don't blame them. I mean, if I had spent my life being a teacher or whatever it might be, I mean, my IQ is just as high as the average or higher than the people on the boards and all that. But on the other hand, I want to get on a board. I mean, $300,000 a year would look terrific, and you don't even have to retire probably in most cases at 65 or anything of the sort. So to call them independent is ridiculous. And if you're on one board like that, you want to really go on another one and make $600,000 a year, and you are not going to do things that irritate your present CEO. So when he or she gets a call and says, "Would this guy make a good director?" that the answer is no. I mean, it's just ridiculous to ignore the factor of compensation with board members.
Okay.
All right, let me ask a follow-up question that is similarly related,
yeah.
Warren, and that's just having to do with sustainability, all these issues that are out there. Guys in the control room, sorry, this is not where I told you I was going, but Abhishek Boudreau wrote in a question. He said, Larry Fink recently said that our investment conviction is that sustainability and climate-integrated portfolios can provide better risk-adjusted returns to investors. What's your view on sustainable investing?
Well, I don't happen to make that decision when I'm buying the stocks in our portfolio. What their individual policies are, I think they're all pro-social. I mean, obviously, you've got to be in tune with your society. But if you think that I look down at a bunch of stocks and decide whether to buy Apple or whether to buy J.P. Morgan or I'm not using the factors and that he lays out.
Okay. I want to run through a series of questions that have been in. These are kind of all over the map, so forgive me, we'll bounce around, but these are questions that came in from viewers that I thought were good ones. Lucas writes in, he said, did Justin Sun change your mind on cryptocurrencies? For anybody who doesn't know, Justin Sun bought the dinner or the lunch that you just had from the last Glide Foundation fundraiser. He is actively involved in Bitcoin. After that meeting, his PR people put out some notes saying that, you kind of listened to cryptocurrency and maybe you're a little more in tune with the idea of Bitcoin now. Well,
I would say this. When Justin and 4 friends came, they behaved perfectly, and we had a good 3.5-hour dinner, and the whole thing was a very friendly exchange of ideas. But cryptocurrencies basically have no value, and they don't produce anything. So you can look at your little ledger item for the next 20 years, and it says you've got X of this cryptocurrency or that. It doesn't reproduce, it doesn't deliver, it can't mail you a check, it can't do anything. And what you hope is that somebody else comes along and pays you more money for it later on. But then that person's got the problem. But in terms of value, zero.
So it sounds like he did not change your position.
No, but I didn't change his either. And I had a very pleasant dinner, and those people they behaved more than well. And they gave Justin gave $4.6 million to Glide, and that will buy a lot of meals and provide a lot of beds for people in San Francisco. So I thank him.
He gave you some Bitcoin. What's it feel like to be a Bitcoiner?
I don't have any Bitcoin.
You don't?
No.
Okay.
No.
You don't own Bitcoin.
I will. No, I do not own one. I don't own any cryptocurrency. I never will. And in the end, I may start a war on currency. Maybe I can create one, and I'll say there's only going to be 21 million of them, and you can have a little ledger sheet from me and everything that says you have it, and you can have it after I die, but you can't do anything with it except sell it to somebody else. And the interesting thing, of course, is that Bitcoin's been out there a long time, and people talked about how it would be used in various kinds of exchange, but none of our companies are doing business in Bitcoin or anything. Bitcoin has been used, I think, to move around a fair amount of money illegally. So the people
maybe in countries where you have a
so the logical move from the introduction of Bitcoin is to go short suitcases, because the money that was taken in suitcases from one country to another, suitcases will probably fall off in demand. I mean, so you can look at that as the economic contribution of Bitcoin to the society.
All right, let's talk about a question that comes in from Rusty Thomas, and he's got a question on baseball. He said, given Warren's love of baseball and the contrast between his deft management of the Solomon Brothers scandal and Major League Baseball's inexplicable mismanagement of the Astros sign-stealing debacle, what advice would Warren provide MLB Commissioner Manfred to restore confidence and integrity in the game?
Yeah, well, it survived the Black Sox scandal back around 1920, and people will continue to love baseball, but it was one thing to steal signs if you were on second base, but it's bad. Baseball will get past this.
You're a huge baseball fan. Were you?
Pardon me?
You're a huge baseball fan. Were you surprised to hear about?
Yeah, I was surprised to hear about it. Yeah, but then I found out that Bobby Thompson's home run. Somebody just stolen the sign. I think off Ralph Bragg or somebody. So people are going to, in any games, including the stock market game, a certain number of people cheat, and generally we have people that administer things to try and minimize the cheating, and I'm sure that Major League Baseball will address the problem.
Should the Astros players get off scot-free?
Oh, I'm not going to make a judgment on that, but Joe Jackson certainly didn't.
Yeah. Let me ask you about a question that came in from several viewers, actually, and that's about the ETFs. DeMosley Management wrote this version of the question, and news agencies have reported that Berkshire Hathaway purchased 2 ETFs. So can you talk about if this purchase happened, and if the purchase happened, who purchased the ETF for Berkshire Hathaway, and how was the decision made to purchase it?
Yeah, it wasn't me. It wasn't me, or it wasn't Todd, or it wasn't Ted, and it happened in some pension fund, and we have a few pension funds that aren't actually managed by us, but all I can tell you is that nobody that manages money at Berkshire is buying ETFs, nor do I see any possibility that they will.
Okay. Another purchase that came up recently, Kroger, and Jason Escamilla writes in, was that one of yours or a lieutenant's pick?
It was one of the others, I know Kroger. Kroger's done a good job, but it's in a very tough business. I mean, when you have Amazon and Walmart slugging it out and Costco taking a special part of it and everything, it's a tough business, but they've done a good job, and one of our managers decided to buy that.
Okay. And then Kraft Heinz. This comes in from David Hall. He says, Mr. Buffett, while Kraft Heinz continues to whittle down their total debt, do you feel that the current dividend payout is appropriate, or should it be reduced further to free up more cash flow to reduce debt more rapidly?
I think Kraft Heinz should pay down its debt, and it should. But I think under present circumstances, it appears that it can pay the dividend and pay down debt at a reasonable rate, and it has too much debt, but it doesn't have debt it can't pay down, and the debt holders are going to get the interest, and the debt should come down year by year. And I think it will, and I think it can with the present dividend, but who knows for sure in the future.
Theo Philos writes in a similar question and says, do you still believe in the company and management at Kraft Heinz?
It's still a great business in the sense that it earns, we'll say, $5 billion after depreciation, pre-tax, on $7 billion of tangible assets. It uses about $7 billion of fixed assets. It has no net working capital. I mean, it's a very valuable business, but we paid too much for Kraft, and we took on more debt in that, but we paid too much.
Another question comes in from Beal, again on Kraft Heinz, and this person writes in, private labels have performed very well against brands like Kraft Heinz, but they haven't made a dent against other brands like Coca-Cola or See's. Why do you think that is, and how do you think about brands' moats, given your experience with Kraft?
Brands are always going to be in a fight with the retailer, and it varies by country enormously. It varies by product category. If people, I worked in a grocery store in 1941. Charlie worked in the same one in 1940. People would call in, they'd ask for a can of peas, and I'd write down a can of peas. They'd call in and they'd ask for Heinz ketchup, and I better give them Heinz ketchup. They didn't care which brand the peas were. They didn't care that much whether the 2 quarts of milk we sent them were this brand or that brand, but they cared whether it was Heinz ketchup. That was it, 1941. Some brands are terribly strong. You can't bring out a private label cola and do very well with it, and people have tried for a long, long time. On the other hand, you can bring out private labels in lots of products, and they sell very well. And you take Costco with their own Kirkland label. I mean, that label grows dramatically. It cuts across categories. It's done since 1992 or whenever it was introduced. Other people spent 100 years, with huge amounts of advertising and special display, all kinds of things. So the battle goes on. I would say that the retailer has gained ground against brands to some degree, but brands are still terribly important. I mean, try and give me a $10 billion budget and ask me to bring out another Coca-Cola that makes a dent in Coca-Cola, and I can't do it.
Warren, one of the questions that did come in, it was something that you wrote about in the annual letter, was the role that Greg and Ajit play. Greg Abel, Ajit Jain, the 2 vice chairmen who were recently added as vice chairman, the role that they're going to be playing in the annual meeting with shareholders. You said that they will play a larger role in the shareholder meeting. How will that work?
Well, it will mean that any shareholder or any of the journalists there who are presenting questions from shareholders that have been sent to them can direct those questions to either Ajit or to Greg. So if they were insurance questions, they might want to direct them to Ajit, non-insurance questions to Greg. But they will be there, and we'll have 60 or so questions. We don't know what they're going to be, and if anybody says, I would like Greg to answer this, or I would like Ajit to answer this, then they're right there adjacent to us.
They'll be sitting on stage with you and Charlie?
Well, well, he's sitting in front of the crowd. There's 2 different levels of tiers there. Mm-hmm.
Yeah. Again, you said you did this because you'd gotten a lot of questions from directors, shareholders, other people who had kind of advised you that they thought it was good for them to be playing a bigger role.
Everybody. I heard from quite a few people. Now, we directed questions out to them where they were sitting with the directors out in front, and then the spotlight went down. But this may encourage more questions directly of them, and that'll be terrific.
Okay. Jim Bean writes in a question. He says, in the past, both you and Bill Gates have stated that half of the board meetings are spent discussing succession. How has this changed since Ajit and Greg are on the board? Do they leave the room? They leave the room.
But if I die tonight, the board tomorrow morning knows exactly what they're going to do. Hope they're polite about it, let the body cool off. But basically, they know what they're going to do. And the interesting thing about it is, we own the Apple and J.P. Morgan, all those things. I don't know who's going to succeed the CEOs of any of the companies I think that we own stock in. But we're well prepared for succession. It's almost going to be embarrassing how well.
All right, let's get to a few more shareholder questions. Chip Crook writes in a note and says it was reported that Boeing was looking for a large cash loan. Were you ever approached about Berkshire loaning the money, kind of like the Goldman Sachs deal from years ago?
I think Boeing's raised about $13 billion, but that's bank type money. In other words, my memory is that it's maybe 1%, plus like they're looking for traditional bank loans, and we don't make traditional bank loans.
You also talked in the letter about how Berkshire Hathaway Energy, I should say, has the ability and the talent to manage big investments, $100 billion and more. I think you wrote, "We stand ready and willing and able on such opportunities." California Governor Gavin Newsom asked you at one point to bid on PG&E. Is that such an opportunity?
PG&E, we obviously, I mean, we work with them for decades and been familiar with them, but that doesn't fit Berkshire. But if there were $100 billion of transmission lines or whatever it might be, Berkshire could do it. I mean, and we would love it. That happens to be a very tough thing to do because you cross all these states and everybody says, not in my backyard and all that. But there can be huge, intelligent investment made in the utility energy area, and no one is better equipped to do it than Berkshire in both talent and resources.
Why does PG&E not fit that bill?
It's too tough. I don't know the answer to it. I mean, rearranging that utility. I think I know Governor Newsom. I think he's a very, very, very smart guy. And in terms of solving this problem, it's just not easy. You've got so many constituencies, and they're at each other's throats, and there's lots of money involved. And I don't want to be the guy. I don't know how to solve all that.
Okay. Let's go on to a question that is posed by Ken Ducey. He says, you sold 31 newspapers after buying them over 40 years as a self-described newspaper addict. You said recently that most newspapers were toast. I know that's not exactly what you said.
Yeah, that's not true.
But this isn't his question. You can answer that too. Do you believe the problem with local newspapers is a lack of demand or a lack of innovation and a new business model?
Well, the problem is that, well, getting back to the toast comment, Andy Sherware actually is the fellow that said toast. He was interviewing me and I repeated it. But the problem is, and even every day, the circulation of the papers and every print circulation goes down. And the interesting thing about it, of course, is that the three survivors so far that look promising online are the New York Times and the Wall Street Journal and the Washington Post. All three of those papers sold their smaller papers. The New York Times sold, I think, 11 papers about 7 or 8 years ago. The Dow Jones, which owned the Wall Street Journal and now is owned by News Corp, they sold the Hathaway newspapers, 8 papers. Washington Post sold the Everett Herald. So they all saw the handwriting on the wall before I did, and they all sold their papers. That was their reaction. They did not try and figure out the online solutions. They got out of them, and unfortunately, I bought some, and we're still in them. I mean, we are financing Lee, and we think Lee has by far the best opportunity to continue print as long as anybody and to find an online solution for these papers. So we put new money into the newspaper industry here, or we've committed to do it. It'll close in a month or two.
And then finally, very quickly, we are in the Berkshire Hathaway's headquarters building here in Omaha. Strom writes in a question that says, why did you decide to rent your offices for all these years instead of buying the building or building your own office building?
Well, we only use 1 floor of the 15 floors here, but we have signed a lease for the next 20 years on 1 more floor, so it shows just how flexible our thinking is about the future.
How much growth you're anticipating?
Yeah, we don't want a big headquarters office. If we had a big headquarters office, we'd fill it, believe me. I mean, if we had 15 floors of our own, we'd have 15 floors worth of people.
Warren, before we let you go, let's just go back to the futures again this morning, because right now the Dow is indicated to open down about 830 points. Weakness again on concerns about coronavirus and what that means. What's your mentality today as you kind of go out and look at the stock market and decide what you're going to do?
We're buying businesses to own for 20 or 30 years. We buy them in whole. We buy them in part. They're called stocks when we buy them in part. And we think the 20 and 30-year outlook is not changed by coronavirus.
All right. Warren, I want to thank you for your time today. We really appreciate it, your generosity with your time, and we hope to see you again soon.
Come every year.
Thank you.